Good afternoon, kids. My name is Daniel Young. I'm the owner and founder of Adaptive Perspective and the Adaptive Perspective social media platforms. And I am back to catch up on videos, to be quite honest. I owe you two portfolio updates. I owe you an overall Substack update. I owe you the normal Sunday update, which I'll get to it here in a little while. Uh, but it's been crazy. And even in the midst of summer, I just got behind. And with me being back at campus as of this past Monday, I really got behind and I need to catch up on some things. So, this is the portfolio update from the end of June. So, the normal disclaimers, this is an unedited video. Who knows what you'll hear in the background as I film these at my house. I'm not a financial advisor, I am a financial strategist, and I don't talk like the herd. I walk in very limited company, and sometimes I walk alone. So back in June, we made what was then the next round of stock purchases or fund purchases. And this is what we bought. So as of June 30th, this is what we bought. These are the final prices. They're color coded. So the olive green is what we're tracking. Purple is what comes recommended by somebody else, but I track that as well. Um, these designations mean what portfolio they appear in. Cash brokerage account versus Roth. And then this color green just means that I inputted this information in these buys and purchases into the master or the actual portfolio for this account. So just to show you what it looks like just for ADX. So the price point, what we bought it at, current share, hasn't paid a dividend yet, should pay by end of month, current ROI, and then that tracks for every single purchase inside the portfolio. And what I'm hoping to achieve by Substack is that I can post this portfolio and I can post some other video content like how to replicate this portfolio, how to build a dividend portfolio, or how to build a dividend spreadsheet and have it communicate with your actual portfolio so you can track individual dividend payments as well as your entire overall ROI. And then you can kind of track however much information you want. Like at the bottom, this is our prior dividend schedule through what was then our broker, and now we do everything. So I like to track total shares, but we have our total investment, dividend to period, which is off a little bit because ADX is a quarterly payer, so it's about $45 less than that. And then we have our overall. So annual dividends, overall yield, accumulated is everything we've amassed so far, having done this for almost 4 years now. Um, and that it grows. Like the annual dividend is not what we've been paid so far because as we buy in sequence, so we bought in June. I'll go back and show. We bought in June. These dividends are annualized, right? But at the same time, since we bought them, like we still haven't been paid ADX yet because the dividend hasn't dropped yet, which that's ADX. So you're building your portfolio with the dividends currently paying you for the rest of the year, but you're also looking ahead to what the dividends will be next year. So what we bought these things. We bought collateralized loan obligations, and we prioritized the time. We looked at bonds and bonds proxies. We also looked at what stock funds or tech funds we wanted to target looking forward, both to a rate cut, um, as well as just the coming market with President Trump getting a lot of companies in different countries to pour money back into the United States. US based stocks, US based blue chip stocks are going to increase in profit because they're going to be worth more. There's going to be more money pouring into the US stocks. They're going to be worth more. With the bond market, it whether it's Powell or somebody else, whenever the Fed decides to do its freaking job and actually cut rates based on data and not maintain rates based on their own fears and a power grab, when rates drop, everything should be better. Everything should do better, but the bond market should move inverse of that rate cut. So bond prices should rise. Uh, we'll see what happens to the dividends. I think the dividends will keep coming. Um, I'm hoping to see some special dividends in different funds. So this is what we bought. Buying along those lines, we bought bonds, bonds and bonds proxies, and that it's a private lender BDC. Municipal bonds are great. It goes back to inversely working on rates. Rates drop, bond prices rise. One, but two, when the herd looks for easy money solutions. So if rates drop, then the overall interest rate on park money might drop as well. And municipal bonds are safe in that the default rate is so minimal, it's pretty much zero. And as a herd investor, if you're looking for a safe place to put money, your money market account is great at that 4 or 5% interest level. That's great, easy money. It just sits there and grows. But if that percentage drops significantly following a rate cut, or at least following the rate cut that we would all like to experience, they're going to look for places to stash money in a tax-free or tax equivalent spot that generates 8 to 10%. Sounds like an amazing place to just have your money hang out and grow. Even, I mean, that's double what they're making now in a money market account. But if that money market account drops or that rate drops, they're going to look for another way to get the same kind of money or better. And I think they'll shift more money into the municipal bond market. And on my end of things, that will close discounts and that price will rise. So more shares bought means price will rise, supply and demand principles, and then the discount windows will close. And I don't know if the dividends will go up, but close like a increase of price, decrease of discount, those work in our favor. And then the stock funds, there are 4 funds that I found that I would park money in. One of them pays monthly. That's NBXG. Of the others, we bought the other 2 this last round, which I'll cover in a different video. But ADX at the time had the best discount of those alternative 3. ADX, USA, ASG. USA and ASG are sister funds owned by the same company, structured very differently, still very, very US blue chip targeted, just thankfully invested in different funds. But ADX at the time that I bought had a better discount than those. So I bought ADX and I looked at everything I could possibly look at because, and y'all know me, it's not a monthly payer. It pays on a quarterly schedule and an off quarterly schedule. It should be a category 2, but it pays on an off category 2 schedule. It should be 25811, but it pays 25812. It pays 8%. I want to say the company standard is to pay out 8% of its net asset value on those payments. So it fluctuates a little bit. I've pitched the idea that ADX should pay monthly. So like make the monthly payment consistent and then pay a special dividend at the end of the year to offset whatever they're not paying monthly. Because 15 cents a month sounds amazing, but instead you got to wait for every 3 or 4 months to get it. But of stock funds, those are the best funds that pay monthly. Well, NBXG pays monthly. ADX pays, we'll say, quarterly. It has the best track record. It used to be a hidden yield. It still might pay a hidden dividend at the end of the year. We'll see. It is US based, US targeted, has this super long track record, really great history, has grown in value over the years. It's not flatline like a lot of other companies or a lot of other funds. So, gosh, and it's higher than what I would normally pay. It is. It's higher than what I normally pay. But we're looking at the current market, looking to scoop deals for a long-term game plan. And I mean, for this purchase round, ADX fits that build, even though it's more than I would pay, and even though it pays quarterly. So, and I would love to say I have sway, but um, I would love for ADX to consider switching to a monthly dividend. And kind of the same thing, like if 8% means it's going to be a 45 cent per share dividend payment every 3 months for a given year, then make it less, make it 12 to 15 cents a month, pay monthly, and at the end of the year, tack on the special dividend of what you're making up. Like if you're actually getting 2 cents extra every month in earnings, then tack that on at the end of the year and give me the normal dividend plus a special dividend at 12 on that 12th month. But that's my take because I love monthly payers. Quarterly, I bought two more quarterly this last round, and it's great, but it's not a monthly payer. So yeah, but for the time being, ADX was a great buy, and it still is. So let's see, collateralized loan obligations, bond proxy. You got bonds with BRW, bonds, and the bond proxy with FCO, U.S. stocks with ADX and NBXG, and then NAD, NEA, and NZF are all municipal bonds, and that puts us in great position in the current market. It puts us in equally, I don't know how you want to say, better position in the long term. So that's what we picked. That's what we did. And yeah, if you want feedback or if you want to tell me what you did, or if you want to, heck, you could comment and say, you think I went the wrong way. That's fine too. But if you want to leave me a comment, I would love to see what you're thinking. Um, if you like my content, consider subscribing to my channel. Help me hack YouTube by leaving a comment, sharing the video, and clicking that like button and get the message out that there are much better ways to invest than the traditional stock advice. Gosh, you can clobber the market and just completely trash the herd by using closed-end funds instead of the traditional 60/40 stocks to bonds or that 4% rule, and especially by staying away from single companies. So let's see. If you want to find me day to day, comment on the video or find my group on Facebook. But at the same time, I'm moving that Facebook group, so best way to find me is on these videos. And I will see y'all on a different one. Try to leave this exceptionally short because I normally make longer content. I know. So comment if you've got some, or yeah, tell me what else you want to know. And otherwise, I will see y'all on another video. Bye bye.